Alright, let's talk about Opintra today, which is our options intraday scanner. So we have talked about our swing scanner, which is Scanny. We have talked about our daily scanner or intraday scanner, which is Flash. Now let's talk about our intraday scanner, but from an options perspective. So this scanner, so Flash is used if you're a day trader and if you trade stocks, not options. But then Opintra is used if you are an options trader and you want to leverage options flow to trade options. Flash is more like you want to leverage price action analysis to trade either stocks or options. Opintra is you just want to leverage live options flow now. So all of the signals or all of the scanners that you're seeing here are based on options flow. Okay, so very similar to other scanners, we have filters for stock price, bid ask, volume, and then we have our scanners. We can scan by market cap, sector, unusually large contracts, volume and open interest relationships. And then we have different types: cheaply, which would be a very cheap contract; high volume leap would be a farther out contract with high volume; high OTM would be high volume but out of the money; far OTM would be very far out of the money. Then we have premium setups. Golden sweeps would be premiums with a sweep with more than $1 million in value. Large opening short-term contract. So we have a bunch of these filters that I'll actually show you how to know more about these signals or how to really understand how they're created. But we have all of these that you can use in order to find options flow based plays. Okay, divergence is rapid flow setups. You can filter everything that you're seeing in these tables based on your own watch lists as well. Okay, so let's start with the first two tables, which are just scans based on calls and puts contracts. So they are going to so we are going to keep looking at how different how flow is coming for different contracts, and anytime we see something meaningful, we are going to create a signal for that, we are going to create a scan for that, and we are going to publish it here. This tool is live as well, so it updates every minute, and most of these tables auto refresh as well, so you'll see live data all day. So the first thing that you should do is just understand what are some of these column names. So symbol is symbol, spot is the stock price, STR is the strike price, X is the expiration, and PR is the bid ask price for the contract. Then this is the signal name, and what does this signal really mean? You can know that if you click on the dashboard symbol. So when you do that, you're going to see a small heading with some more information about this contract and about some overall stats about this contract. So what is rapid flow? So rapid flow just means continuous rapid flow for a contract within a couple of minutes. So let's say if we are looking at this Netflix calls for 240 strike, let's say we saw 5 different contracts hit our options flow tool. That's what rapid flow is. Let's say we saw those 5 contracts within 2 minutes. Now that's rapid flow because we just saw a lot of flow that came in within a very short span of time. We have some more information about Netflix, the sector, the market cap, net premiums, and orders. So there were 13 orders that came in succession or that came in very rapidly. The relative volume today overall is 1.46, and the volume today for all contracts for this particular strike and expiration is 10k. But this orders and this net premiums is really meaningful because orders is how many times did we see flow or flow trade for this contract, and then the net premiums is the most useful one, which is what's the sum of the bought positions for this contract and the sold positions. So let's say we see this Netflix call contract that came in and there was rapid flow. How do you know if that rapid flow was buying of all of these calls or selling of all of these calls? And that's what you can get from net premiums. So for a call, these net premiums, and even for a put, the net premiums are difference between bought positions minus sold positions. So if these net premiums are positive, then that means more calls were being bought here. If this was a negative value, then that would mean this rapid flow was actually selling of calls, not buying of calls. So let's say you wanted to make a bullish play and price for the 243. Let's say you saw this 240 strike. Let's assume it was 250 and you wanted to buy a 250 strike call. Then you need to make sure that the net premiums were actually positive, which would mean that these contracts are actually being bought, not sold. So that's a very important filter that you need to keep in mind. Then for others, 5x net premiums just means the net premiums on average, the net premiums for today are 5x of the net premiums that we often see and that we usually see on average. And again, this was just one order. So what I think, to summarize, for these call contract scans and put contract scans, you want to see large positive or large negative net premiums, and you want to see a large number of orders. So obviously there are many ways you can play these, and this crash course is just to make you aware of what we have out there and how do you actually interpret it. This is not to build strategies based on all of the tools that we have. We are going to have a separate series, a separate course on actually building plays based on different tools we have, but this is not for that. So I'll actually skip over the part where we actually make plays from these signals, and I'll just take this time to explain what some of these signals mean. Okay, so let's look at something from the put side. Net premiums again. So this just means that these puts were actually sold and not bought, because the net premiums are negative. So again, net premiums is the difference between the bought positions and the sold positions. Okay, so this, although this is green, this still means that there were more puts being bought, and this is probably a sort of user interface thing that we should fix on our end, where this should be red and the negative should actually be green. All right, so now we have these bullish symbol scans, neutral symbol scans, and bearish symbol scans. So this on the top was scans for individual contracts for a stock, but this now these are now scans for the entire symbol based on the aggregated options flow for the symbol, and this is not just for individual contracts now. So zoom a high out of the money. Again, just click on this to know what this high OTM means. It means overall contracts for the symbol today are mostly out of the money. And then you have net put premiums and net call premiums. So net call premiums are obviously negative today, which means more calls selling, but net put premiums are positive, which would mean more put buying. So this just means that most of the contracts today are probably out of the money puts. I will, since I'm just talking about, I will go back and look at the calculations again, just to make sure that these net premiums are actually bought positions for the puts, and like, why do we color them green? Because while I'm talking about this, I do think the green actually means that the net premiums were negative, so more put selling actually. But I'll confirm that, and I apologize because I coded this a long time ago and I can't remember off the top of my head right now, but I'll post the correct answer in the description of the video. Okay, then we have 5x net premiums. This just means the net premiums for all the flow for the symbol is about 5 times more than the average. And then finally we have the hottest chains for calls, and then we have the hottest chains for puts. These are just the contracts that are getting the most volume, and they have the highest relative volume today. And this is a very useful table to see which contracts are the best tradable contracts, or which contracts should you consider as potential trade ideas. And there is a lot of data that goes into these contract scans. So you see 226, 167, but we don't have much in the hottest chains. So that's a good avenue to look for potential options placed and options contracts that you can trade. So that was a short introduction to our Opintra tool. It's a lot more complicated than what we just discussed, but again, we will create separate videos. How do you actually look at a contract in the calls hottest chain? How do you actually then go from just looking at that contract all the way to actually trading that contract? And till then, this is it for this video. We will create a lot more videos on strategies. I just want to reiterate that again. But thank you for watching this. I'll see you guys around.